Hello guys, it's Robbie here and welcome in this backtesting video. In today's video, I'm gonna backtest 15th of March London session, and as usual, we have to check the news before we take a look on the market. And here are the news for the session, and we can say that we do not have any high impact news in this session, so it is safe to trade. However, in New York, there will be core PPI news, but it doesn't affect our trading session. So our London session is safe to trade. And let's take a look on the market because we can start the analysis right here. And let's start everything on the 4-hour time frame. As usual, I did not delete the higher time frame zones. As you can see, I keep them on the charts, and the reason is simple, because the higher time frame is not changing that much. So it's better to keep the zones there. Actually, for me, it's much better. So yeah, let's talk about this region. What happened? Technically, there was a break of structure on the daily time frame. This break of structure has happened from this extreme demand zone. Actually, there was a daily demand which has caused the break of structure here to the upside. This daily demand will be crucial for us at the current price action. So yeah, let's keep in our mind that there is a daily demand. After this break of structure, price built up really nice amount of liquidity after the mitigation of this valuable daily supply zone. This daily supply zone couldn't manage to give that much of a volume to the market, on the price action. And yeah, price has just built up insane amount of liquidity right here for this extreme zone, because after the liquidity creation here, technically the flip of this valuable daily supply zone happened, and price left behind a daily decisional demand right here, which has caused the flip of this valuable daily supply zone. Why did the flip happen after this insane amount of liquidity creation? Because if you take a look here, technically price has built up a much bigger liquidity pool just above this daily supply zone, and this liquidity from this region, there was 4 equal touches, and after the full zone mitigation, price technically created 2 more touches for this huge liquidity pool. This liquidity has been swept. Price made a 1% mitigation and actually swept all of that liquidity from the downside into this daily supply zone, the next recent daily supply zone, which has caused a change of character here to the downside. And actually there was a daily demand too. So technically this supply caused the break of this demand right here. And yeah, the sweep of this liquidity happened, small percent mitigation on this zone happened. And after this small percent mitigation and the sweep of that huge liquidity from this region, 4-hour has changed character here to the downside, because price left behind a clear 4-hour demand right here that has caused the flip directly on this daily supply. And technically the change of character on the 4-hour time frame happened here. Also the daily change of character happened here. And after the 4-hour change of character, technically we could expect the sweep of this huge liquidity pool into this 4-hour demand. On this 4-hour demand, we were expecting a reversal to the upside and the expectation break of structure here. But as I said before, this daily extreme demand was a crucial zone for us, because if you take a look here below this 4-hour demand that has caused a flip here, because there was a 4-hour flip zone. But technically this 4-hour demand caused the daily break of structure directly. So this 4-hour demand had really nice amount of inefficiency just below it, and this inefficiency, actually this is just a huge inefficient candle right here, has to be filled up sooner or later. So the reason why this 4-hour demand wasn't strong enough to hold the price, because the real volume came into the market from this daily demand, from the origin of this whole structure breaking movement. And technically this 4-hour demand was only a decisional zone for us for the extreme zone right here. And you can see that I marked this extreme forward demand out because the real inefficiency came into the market from this week. And why I did not mark the whole candle out, actually why I did not mark the inefficient, actually the wick out, because the wick is still greater than the previous candle. Well, if we take a look here, this wick would have been the real inefficient candle, inefficient zone for us. However, price made a mitigation on this wick, and technically the real inefficiency came into the market from this wick and not from this lower wick, because this lower wick didn't have any inefficiency, but this wick has inefficiency right here. This is the inefficient gap. And also the 50% of this forward demand that has initiated the overall structure breaking movement right here. The 50% of this forward demand perfectly lines up with the daily zone's top edge. So technically the 50% of this forward zone is actually the top edge of the daily demand. So this is how the daily demand looks like. So the 50% of this forward zone perfectly lines up with the top edge of the daily zone, and we can still expect a deeper mitigation on this extreme zone right here. And why can we expect that? Because price made a small percent mitigation. Here, after this small percent mitigation, price built up liquidity, really nice amount of liquidity right here. Price reacted on a 15-minute supply that could reverse the price to the downside. Price made a forward break of structure here to the downside with a small body break, but actually the break of structure happened right here, as you can see. After this break of structure, price left behind two zones. Technically, this was our decisional zone, which has caused the break of structure directly. And we had another zone right here, this extreme, but there is a downside for this extreme zone, and actually for these zones, which is this huge liquidity pool right here. So there is really nice amount of liquidity on the upside, which has to be swept in order to make a deeper mitigation on this forward/daily demand down here. And after this deeper mitigation, we can expect the overall bullish continuation, and we can expect the break of structure on this daily weak high point, because technically this high right here is a weak high point. So yeah. So what do we have here after the break of structure? What happened? Technically, these zones couldn't manage to hold the price, and price has just mitigated this weak supply, which zone had really nice amount of liquidity just below it, and also it had inefficiency. Because if I adjust this zone, you can see that here is the inefficient gap just above the liquidity pool, huge liquidity pool. However, this zone technically couldn't manage to do anything because there was the forward demand, and the flip actually happened from this zone, and this zone has been already mitigated, but we could still expect a reaction on this weak supply, which actually happened, as you can see. But after this reaction, it couldn't manage to continue the overall, actually it couldn't manage to make that much of a reversal. And after this small reaction, the flip of this forward supply happened from this huge candle right here. And yeah, but if you take a look on this bullish movement, we can say that this movement right here, especially this movement, this will be a perfect liquidity pool for a possible deeper mitigation on this forward/daily demand. So this will be function as liquidity for a deeper mitigation. Also, you will see that on the 15-minute time frame that there will be another liquidity pool on the 15-minute time frame. So technically, this whole movement will be a liquidity for a deeper mitigation on this forward/daily demand. we will take a look at this region because there might be a 15-minute supply that hold the price, actually price reacted on it. Also, we can also assume a reversal right here. Why? Because the breakout structure has not happened. And if we take a look on the 15-minute time frame, these three touches will be a perfect triple tops on the 15-minute time frame, and this liquidity has been swapped perfectly with this candle, and the further breakout structure has not happened. So we can expect a reversal to the downside because the bullish movements are weakening as we can see that. So yeah. So and technically that's all on the 4-hour time frame. We can still expect a deeper mitigation on this 4-hour demand, and we will see what happens. But currently, I would rather look for long opportunities. I would rather prioritize long opportunities because after this mitigation right here, after the breakout structure, there was really nice amount of liquidity which has been swapped by this movement. 50% mitigation still not happened, but at this region currently the price is bullish, so I would rather prioritize long opportunities over short opportunities. So yeah, technically that's all on the 4-hour time frame. Let's take a look on the 50-minute. And let me take a look if price did mitigate any supply at this region. And actually, it mitigated this 15-minute supply zone. Bear with me a bit. And why this 15-minute supply seems like hold the price? Well, we need to see the 4-hour time frame first. And if we take a look here, this is the 15-minute supply, which has been mitigated currently. After a reversal, after the full zone mitigation on this 4-hour demand, technically the overall flipping movement has initiated from this 15-minute supply. So this is our origin of this flipping movement. And this is the reason why this zone hold the price. However, it's still, I am expecting the break of this zone on the long term. So after a deeper mitigation here, I would rather expect a mitigation of this NFP supply, but yeah. But this 15-minute supply has a chance to hold the price and make a reversal to the downside. But in order to execute shorts, I would rather see a 50-minute change of character to the downside. And yeah, and let's take a look on the 50-minute. And let's see what happened here. And as you can see, there was a perfect triple tops, which has been swapped into this 50-minute supply. The 50% mitigation has not happened. It's almost a 50%. It's like 46, 47% mitigation. So yeah, this liquidity has been swapped into this 50-minute supply. Also, this insane amount of liquidity has been swapped before. And let me mark this 4-hour demand out because I forget to mark it out. So price has reacted on this 4-hour demand, but this 4-hour demand mitigation couldn't manage to create a new break of structure to the upside on the 4-hour time frame. And if we take a look on the 50-minute, this high was our previous 4-hour high point. And is it? Yes, this high. Okay. This high was our previous 4-hour high point, but this high wasn't broken. Haven't been broken on the 4-hour time frame, but on the 50-minute actually it happened with this movement and directly from this 50-minute demand. However, this 15-minute demand has already broken on the 50-minute time frame. So technically a 50-minute change of character happened to the downside after the 50-minute supply zone mitigation. So 15-minute change of character happened. Wait a minute, let me drink a sip. Okay, I'm here. Sorry, guys. So 15-minute change of character happened, and price actually left behind a possible reversal point right here. However, the change of character happened from this week, but the real movement, the inefficient movement, came into the market from here. And this zone has some inefficiency too, but I would rather wait for a break of this zone because there is another 15-minute demand.